All right, so we have been talking about incorporations, and the question I often hear is, I work up north and my employer is requiring me to incorporate. Is this a good idea? In truth, if you want to work with this employer, you're probably not going to have a choice about incorporating. But there are some big risks called a personal service business that you are going to want to know about before taking the leap. I hope this video will help incorporated subcontractors manage their tax risk. Question number 1. What is a personal services business? So personal services business, or a PSB, can pop up when an individual would normally be an employee if it were not for the existence of the corporation. PSBs take the tax risk away from the employer and put it into the hands of the employee that is required to be incorporated. Let's go through an example. Tom is looking for a job. An Alberta-based oil company offers him a 12-month contract position with full-time hours and generous benefits. However, the contract comes with the requirement that Tom perform his services through a corporation. Now, Tom is eager to take this lucrative job, so he decides to incorporate. Tom is the only shareholder of his corporation and the only employee. Tom's only client will be his employer, the oil company. Now, Tom's corporation invoices the oil company for the services that Tom personally performs. Tom receives payment for these services bi-weekly. Overall, Tom's contract with the oil company is very similar to an employment contract. Tom receives benefits, he's employed full-time, he has a 12-month contract, and is paid bi-weekly. Now, in this example, Tom meets the conditions of a personal services business. This is because Tom is both a shareholder and the employee performing the duties. Tom's contract also has conditions that are very similar to an employment contract. Tom also does not employ more than 5 full-time employees throughout the year, and Tom doesn't have any other clients. Tom's structure is a very common setup for employees working up north in the construction industry, but it can also affect individuals working in the medical field and many other professions. Let's dive into some of the reasons you should care about a personal services business label for your business. Question number 2. What are the risks of a personal services business? If your incorporation is labeled as a personal service business, your taxes could get considerably worse for 3 reasons. Reason number 1. Personal service business is not eligible for the general tax rate reduction or the small business deduction, and the government even taxes on an extra 5% for good measure. All of this means you'll be paying an extra 32% of income taxes on your corporate profits if you are labeled as a personal service business by the CRA. Reason number 2. A PSB is extremely limited in the expenses it can deduct. The deductible expenses are limited to these 3 things: salaries, wages, and benefits paid to employees who are directly working for the employer. Number 2, expenses directly associated with selling property or negotiating contracts. And number 3, legal expenses incurred while collecting amounts owing. And that's it. Insurance, bank fees, accounting fees, supplies can all not be claimed. Now, some creativity could pop up around vehicle expenses or room and board allowances, along with other employee benefits, but the risk of these things goes up significantly with a PSB label. Reason number 3. Rather than 3 months to pay any balance owing on your corporate tax return that most small businesses are eligible for, the Canada Revenue Agency only allows PSBs 2 months to pay. So yes, personal service businesses do suck. Question number 3. How can you mitigate the risks of a personal services business? So the risks associated with a PSB are pretty nasty, but there are a few things that you can do. Number 1, having multiple clients, advertising your services, providing your own tools and equipment, setting your hours, and hiring subcontractors or employees can all be beneficial. Option number 2, pay out all the profits as wages. One of the deductions available to PSB is wages. To reduce your tax risk while avoiding that extra 32%, pay any profits to yourself out as wages or employee benefits and issue yourself a T4. Dividends will not do the trick, and they still incur the extra 32% tax. And paying wages to spouses or children is also a bad idea. As an example, let's say Tom pays his wife $80,000 a year for administration services. This will get denied by the CRA and can cause double taxation for Tom because his wife isn't an employee under contract with the oil company. The CRA will deny wages being deducted from Tom's corporation, and the CRA will still charge his wife the tax on the $80,000. Option number 3. Consider voluntary disclosure. If you think you've been in this position for a few years and are beginning to sweat, there is a Band-Aid available. You can opt to voluntarily disclose your PSV status to the CRA. You will still have to pay the additional income tax, but voluntary disclosure can reduce interest and penalties if your voluntary disclosure application is approved by the CRA. That's all I have for today on personal services businesses. I hope that this video has helped you or an incorporated subcontractor you know manage their tax risk. Bye for now.